Here come the top picks from David Burrows, president of Barometer Capital Management. He was asked about Bell Alliant. He said he preferred some other ones, and here's the one he prefers, TELUS, which came out with earnings, I guess it was today. And did they raise the dividend again?
They did.
They did, yeah.
So look, I recognize this is somewhat repetitive because we've talked about TELUS a bunch of times now for 4 years. But sometimes you have to remember that if something's working, it can work way longer than you think. And if the reasons for owning it don't change, then it's okay to continue to buy it despite the fact that it's doing well. So this company took the temperature of the Canadian investing public perfectly 3-4 years ago when they said, we'll raise our dividend twice a year for the next 3 years, which they did. Stock has given a 22% compound annual growth over the last 5 years. At the end of the period, this February, March, they said, look, our payout ratio still is low relative to other service companies. We will continue to raise our dividend twice a year for the next 3 years. We'll give you even more color. Today they said we'll raise it at least 10% a year for the next 3 years. Their earnings came in line. Their mobile business is strong. Their TV business is strong. But the fact is, if you can get the kind of yield that TELUS will pay you, and you're going to get 10% dividend growth, what multiple should that trade at in a world where you can't get income somewhere else? So I recognize it's at the highs. I recognize it's been going up for 3 years or 4 years, but I see absolutely no reason to exit this story. You've got a lot of happy shareholders and a lot of people just waiting for a pullback for an opportunity to buy this type of company, so I think the risk is limited in owning TELUS. Up
and to the right in a very tight range, great looking chart. And do you hold BCE as well, our parent company?
We own BCE as well, but if I had to choose, I think TELUS probably is obviously has a little bit more exposure to mobile and wireless, and I think it's a very attractive, well-run company. They're going to buy back shares for the next 3 years. This is a core position in a portfolio.
Okay, Johnson & Johnson, J&J, consumer products company, and pharma as well, of course.
Right, so we talked earlier about the themes, consumer staples and pharma. J&J just has a sterling track record of growing their cash flow over time. They've had an 8% compound growth rate in their dividend over the last 5 years. They continue to grow their cash flow at 5 to 8%. Their consumer business is strong. Their pharma business is strong, and this is another one of those companies with a rock-solid balance sheet. Now, is it more expensive than it has been over the last 5 years? It's a little bit more expensive, but I expect in this world we're living in today of very low long-term interest rates that these companies can trade to a higher multiple over time.
All right, very good. That's Johnson & Johnson, and you're looking at the Home Depot.
Right. So we talked about taking some of the other themes, and one of the big themes in the U.S. is some recovery in healthcare, in housing. We look for groups that have gone out of favor for a long period of time, and invariably there will be a company or companies that have structured themselves or restructured themselves going through the valley to come out the other side strong. Home Depot rationalized their locations. They got very focused on their financial metrics. And if you look at it, they've bought back $37 billion worth of shares since 2002. So the float has become considerably smaller. They recently raised the dividend by 34%. They've got a very strong cash flow yield in the company. You got a decent dividend, but this is a true beneficiary of pent-up demand around home improvement, and certainly the trades that are in the home building business.
And just quickly, do you have a second favorite home or housing related stock?
Yeah, we own KB Homes.
KB Homes.
Who another company that restructured during the decline and are doing exceedingly well coming out the other side. The big companies have taken market share from the little ones who couldn't get financing.
The Home Depot, J&J, and TELUS, those are your top picks. Always great to see you, David.
Mark, thanks for having me.
We'll see you soon. David Burrows from Barometer Capital. Thanks for all your questions tonight. Bruce Campbell tomorrow night on Canadian Large Caps. So get your questions all ready for that. Until then, we say good night. Take care.